Welcome back. We're in conversation with Raamdeo Agrawal of Motilal Oswal Financial Services, and we were talking all things markets. We discussed banking, we discussed IT, and now we want to talk about manufacturing. That is a third leg, which we've been waiting for so long for it to start to fire, right? Sputtering kind of starts, but not very steady, although hopes are always very high there. But there is always some segments within the manufacturing space which are doing well. I mean, take defense, take railways over the last 2 or 3 years, which have done extremely well. What is your sense, Raamdeo?
See, the biggest part of manufacturing in India is automotive. You know, so whether it is cars, trucks, or motorcycles, scooters, I mean, that is basic transportation, you know. I mean, so that's where I think the high incidence of your GST and all, that kind of hinders the immediate demand pickup. But I think that demand has also picked up. Cars have done very well. I believe from March, even the two-wheelers have picked up reasonably well. I mean, let's see whether, I believe April, May is also going to be good. So I think automotive is picking up. Without automotive picking up, see, there are only two things, housing starts and your auto. So both of them are the driver of big ticket items in any household. House itself and then the car. Rest all is like a daily kharcha. So housing demand is very good. Real estate is very good. So all the components of real estate, whether cement, steel, your plywood, your paints and whole lot of things, you know, whatever goes into building a house, filling the house.
Building materials, the entire
building
spectrum.
materials, all this. So that's one, and that's all manufacturing. So tiles and all. So I think that should pick up as we go forward. As interest rate stabilizes or starts going down a little bit. So that's where I think bright spot is, or your automotive. Automotive has one problem, this EV versus IC. You know, that confusion is on, who is going to transit successfully. So multiples will be in question, you know. But I think earnings will, because money is not there in EV, money is there in IC. So, and transition to EV in China and Europe has become very fast, but in India it's still very slow. So cash flow will be definitely coming to, and look at the capex announcement by Maruti. They've talked about third plant coming up and fourth plant also there. So that shows a demand build up, because that's a aspirational manufacturing company.
You said housing, their real estate, I mean, contractors, builders basically. What's your view? We had the management of Lodha with us recently. Of course, they were talking their book, but they basically said that we are in the second or the third year of what is going to be a longer than usual real estate upcycle. Do you believe that to be true?
Yeah, I mean, we've not made money out of any real estate, so I've not. But I think this is almost a lost decade for them. So it must last, because ultimately housing needs are there. Everybody needs house. There's so much of gap between the housing stock and demand. So clearly, and here the interest rate is very important. If by chance we can give interest rate little lower than say today, say 7.5%, 8%, if that can come down by even 100 basis point, I think this run on demand for housing, that will keep building up. And this is where again this rupee dollar is going to play a role. If you keep losing 4%, it does play into the inflation. If that becomes zero, you imagine, you know, at least 50% of that will flow into decline of the inflation.
What about the rural market? Are you worried about the rural slowdown extending itself? Because HUL's volume growth numbers were not very inspiring this time.
So I spoke to one or two companies which are catering to, they're saying that basic demand is there, but anything called discretionary, say, that's not doing well in rural. So is it because of the high inflation? Is it because of the high taxation incidence? Is it because of just that construction transfers are not picked up fully? You know, because a lot of rural income is not only agriculture, it's also what transfers go from urban centers to the rural centers. So maybe trickle down may take another 6 months or so, because dislocation because of COVID was very, very deep. So I would think that it's a trickle down, and maybe another 6 months and good monsoon, I think that will do the trick.
You know, Raamdeo, I want to ask you a couple of questions on the flows. I recall you telling us the FIs, they're having it easy getting out of the market. But when they have to come back, it's going to be painful at higher levels. So, you know, that seems to have played out as well. In the last month or so, we've seen more buy numbers from the FIs. So how do you see the FI flows moving? And also with regard to the domestic flows, now you're getting fixed income at 7-8%. You know, so do you think there is a chance that domestic flows cool down a little bit?
Yeah, it has definitely cooled down because all the guys who came, I mean, they've not lost money because of steadiness of the market. but they've also not made money.
Not made money, yeah, that's the point.
And the guys who went to fixed income, they didn't have to go through up and downs, and they still made 7-8%.
Yeah.
So as the market takes off from here and goes up by 20%, then again the power of equity will come back, in the sense that it is at 12% instead of 6%. So that assertion to the new set of people is yet to happen. So the index has to go from current 17,000-18,000 to more like 20,000-22,000. Whenever it happens, maybe next year, year after that, it will happen. That I don't have any doubts. So when that happens, then people will realize that here, this is where the money is made.
Yeah.
So, real fun will be when something happens and the earnings growth picks up to 20%. Then you see rupees stable and earnings growth is 20%. And P multiple is also 20. Because next year, talking about 900, anywhere between 25 to 50. So then you are at 18,000. So you are talking about less than 20 P for 24,
yes,
which is kind of reasonable. So then FI is also piling.
Yeah.
So a lot of things are converging into what can happen in next 1 year. So that's what we're hopeful.
Raamdeo, let's get to the earnings at Motilal Oswal.
Yes.
They've been a little subdued.
Yes.
I mean, if you look at asset management, asset and wealth management, capital markets, numbers have been on a year-on-year basis subdued. Home finance is the one which seems to be
Bright spot.
the bright spot.
Yeah.
Tell us, what are the plans?
So of all the businesses, we had a bit of problem in last 2-3 years in housing finance. Now with all the, what is happening to the entire financial sector, this has also picked up, and now we are out of the woods, I would say. There is a 50-60% growth in the profits, and it is looking good in the years ahead. So I think that is one achievement. The rest of the businesses are stable. Actually, Motilal Oswal is a twin engine. One is the operating business, other is the investment portfolio. Investment portfolio is 100% equity. So last year when the market was flat, broadly portfolio has remained stable. So there is no accrual because of that, which is very 60-70% of the balance sheet is there. Whereas the earnings side has done 4-5% higher only, all put together. So clearly my net worth has grown about 12 to 15% in the current year. From 5,600 has gone to 6,250. And the moment the second engine also works in next year or year after, then you will see I think last 8 years compounded growth in the net worth has been more like 24-25%. So I think those rates will come back, but current year is not matching with that.
All right, Raamdeo, quick final question then on the index itself. With a 1 year horizon, will we be at 19,500, 16,500, or do you think we consolidate at these levels?
Will be higher. I don't know how higher.
That's a safe answer.
I mean, he also mentioned that on the 700 points higher. No,
1,500 points higher, 1,500 points lower. So which one do you want to go for? 1,500 higher?
I would think so, because see, once 1 year is negative, then you are longer you underperform, that 12% is getting accumulated. So I would think 15-17% it is ready for a move.
Gains accumulate.
Gains.
Then they happen.
It's like a what do you call cumulative redeemable preference shares. So if you don't pay now, you are going to get it later.
On the investment book at Motilal, I mean, anything new you've added? Anything?
No, it's same. I mean, public and private, some kind of a split is there. So that continues.
And the public market side, anything? Because you keep evaluating opportunities.
Yeah, no, nothing direct. Yeah, so it's all going into. In fact, last year accretion to the investment portfolio is low because of all these regulatory changes. That is taking a lot of free cash flow from the operating side into the businesses.
These new age businesses, Raamdeo, you had a strong view. I mean, things like Zomato, etc. How's the view panning now? Because
I think worst is behind.
Yeah.
Worst is behind. I mean, we have seen peak of pessimism, and I think some kind of I would not say optimism, but some kind of sensibility is prevailing. And even managements are going for faster road to profit, and they are struggling they're not used to showing profit, so they have to work extra hard to change the track, and instead of losing money, I mean, at a cost of a little bit of growth, they have to make the model a little more profitable.
Raamdeo, thank you so much for being here with us, and thank you very much for dropping by into our studios. It's always a pleasure having you with us here on CNBC-TV18. Thank you. Well, there you have it. Raamdeo Agrawal at Motilal Oswal Financial Services on all things markets. His view on sectors, banking, IT, building materials, manufacturing as a space, and of course some of the new age companies as well. Wrapping up with a little bit on the earnings from Motilal Oswal and what you can expect if you're a shareholder there. That's Market Masters for you. Thank you very much from all of us here. Goodbye.